Welcome back, folks. That's right. It's the all elusive 3P, and I'm going to be talking about the best stock to buy now, in my personal opinion, for my portfolio. I'm going to teach a little bit on what I look for and why I dropped over 200,000, I believe, on this place so far, with much more probably incoming. And so this is a crypto video at all. This is why I am putting so much money into that stock, and possibly two stocks. Well, between the two stocks I'm going to talk about in this video, I have almost $800,000 invested. And I'm going to talk a little bit about it. Now, that's it. For those who do not know, I do have a 1-day option thing going on here, I should say, where you can get into the Discord for a 72-hour pass on the house. First link down below. Once you click on that, you need to do the learner or earner tier. But you can come in and check it out and see what you think, folks. This is the first time I've ever done this, ever. For 3 days, you can come in and check it out. I'm live stream trading privately tomorrow as well, teaching all that and more. 36 learning lessons, a ton of stuff. There you go. First link down below. Now, I'm going to talk about the stocks I like. And what I mean by that, even with this issue, is that I have been buying a lot of these two stocks. And for those who are in the Discord, you know. Now, one of them, and they are both related to what the Fed's going to do. So I try to look at the markets, and I don't just play the markets like QQQ. That's it. I'm done. And you can do that, and that's fine for the long term. What I try to do is I try to be aggressive, and it's not for everyone, of course. It's up to each person how you want to invest. Use a financial advisor. I used to be a financial advisor and taught finance and statistics and all that good stuff. So now I handle my own investments, of course. So I'm trading extremely aggressive, and I am okay with that. So one of the things I am looking at is what the Fed's going to do. And I see, and I've been calling for this, the unemployment rate to go higher. I actually thought we could get up to 4.5% to 5% by the end of this year. I was surprised that we weren't there, but now we're starting to see massive changes month over month. I still am in the boat that we are going to continue to see massive changes month over month. With that being said, so much so that I don't just say it, I put my money where my mouth is. And if you appreciate that, and me being transparent, the most transparent YouTuber out there when it comes to these moves, showing you the portfolios, everything, hit the like button. Fact is, I always say, like me or hate me, at least I'm showing you everything. And you don't have to guess. You see the actual portfolio. I did that actual portfolio in my video right before this one. And so, if you want to see how I'm trying to take 2 million and turn it into 10, go ahead and subscribe as well to the channel. One of the big moves I've done is based off of this. So the Fed is going ahead and they are lowering the rates most likely. Remember, I had a lot of people, and I've been calling for possibly 4 rate cuts between now and the end of the year. And it'll never happen. That's because they followed this chart. All right, this chart had an easy 0 in December. Easy 0 right here. Now it's up to 8%, and people are like, "Ooh, how'd you know that?" It's because I follow all the data. The leading economic indicators pointed to some weakness that would be coming up for unemployment. We are seeing that for employment numbers, and you're going to continue to see that. Now, the Fed hasn't cut yet. The rates are still higher for longer. I think they probably should have cut a while ago, but at this particular moment, they are going to cut in September, I believe October, as well as December. Now, the only question we got is they said 2 cuts for the rest of the year. At one of the meetings, a couple meetings ago, I believe they're going to do 3 to 4 cuts. The base case is 3. I think we all agree 3. You can see it's now 80-something% chance, almost 80, 79.5% chance of 3 rate cuts or more by the end of the year. Well, if you go all the way out to next year, you're going to see that they are calling for 6 rate cuts. 6 rate cuts right here. And that is massive, folks. That is a massive amount of rate cuts. So I look at the data and I think, is inflation going to go through the roof? And I think the answer is no. In terms of, yeah, we have the tariffs. I get it. You're going to have a one-off inflation pop. Like if you charge a lot of inflation that we never had or I should say charge inflation. If you have tariffs that we never had them before, and they just stay, of course you're going to have the prices go higher. Uh, it's just how it works. If I have a can of Coke that I sell for $1 that I import for, let's just say it costs me 80 cents I get it here, and then I sell it for $1 to make 20 cents profit, and they say we're going to charge you, 15% on that and that soda coming in on the cost that I have. And so the 80 cents times 15%, it's 12 cents. So that 12 cents, I sell it for $1. I was making 20 cents. Do you think people who own the company is going to say, yeah, we'll just make 8 cents and be happy? Or are they going to tack on the tariff to the cost of the soda to make it $1.12, so they're still making 20-cent profit per soda? And in my opinion, I believe if I owned the business, I would tack the price on slowly but steadily, but get it on there and make sure that my profit, my bottom line, is still making what we want to make. And I realize that. So any inflation data coming in, I get it. It's going to be something that quickly hits. People are going to be upset, but overall, it's kind of a one-time pop on things, and that's how I see it. Now, now let's go to the counter of this now, because if we get into a recession, you're going to see deflation. In other words, you're going to see people losing their jobs, unemployment going higher. If it gets above 4.5%, I don't care if it's 4.6 to 5, you better start worrying, because I think we're going to be approaching a recession. And if we get to that point of 4.6 to 5 by the end of this year, that's what I think we're looking at. And in that case, you'll see prices drop because people aren't working, they're not buying. That puts more pressure on businesses because they're not getting the sales they were used to because of what I just told you. And you do have that tariff issue still playing, and people who didn't have to pay their student loans last year had to start paying them just recently. So a lot of money's out of the market, if you will, in terms of people, what they can buy, tariffs, all of it and more. And so it's leading to what I think most likely will be a economic slowdown. In other words, you don't have this massive amount of money that we did at one time, and for a multitude of reasons. So what I see, putting all that together, is that the Fed's going to have to cut rates. That's plain and simple. So we have the 6 rate cuts that they're pricing in. It could actually be more. And if we have a recession, it will be more. It'll go down quickly, and you'll have a 50 basis point cut at one point. That's 1 point. You'll have a quick 50 basis points. And you'll have a stimulus check by the end of next summer. I'm calling all of this now, right? And so much so that I hope it does not happen. I've lived through recessions. I remember seeing my dad lose his job. We're being on food stamps and everything else. It's a horrible time. It's a horrible time. And we don't want to see that. And I hope we don't see it. But if unemployment goes to 4.6 to 5% by the end of this year, I think we do see it. And that means things are we're starting to have trouble. And that's not a good thing. And I hope we do avoid it. But with that all that being done, calculated, I figured what plays could I get in to take advantage of 2 things. One, we don't have a recession, and inflation comes down. Everything works out the way we want, and the Fed cuts those rates. So I'm looking at what the Fed's doing. Right now, we're pricing in 3 rate cuts. What's the one stock that I thought would be a little bit higher risk, higher opportunity? And it's Rocket Mortgage. Rocket Mortgage, okay, for those who don't know, they do mortgages. And if you have the 30-year mortgage rate go down, which it has gone down, I think it was over 7% just a little bit ago, and now it's down to like 6.25, roughly. You guys can get the up to the minute what it is every day. You can go out there and check that. And I think TLT actually dropped more today, or not TLT, the yields did. So, but anyway, so this is one that I bought $200,000 worth of. In my opinion, for my portfolio, this is one of the best stocks to buy now for me and the risk and what I'm looking at. I have a ton. You guys know I have crypto. I have a ton of everything. But this is one of the equity plays. I thought, you know what? I'm going to give this a chance to run. If I'm correct and I'm comparing this play to my other play, I want to see which one makes me the most money. And I'm not putting the exact same in each one, but they're both multi-6-figure buys. This one I'm up to 200K. I might actually add another 100 or to 200K in this one, taking a little bit more risk because I believe as rates go down, and I just read the data today that people looking into refinancing picking up. So when you look at the mortgage rates, I was talking to someone about this just literally today, and we were talking about different mortgage rates. When's it worth it? And depends on the cost of the mortgage company and everything else. They were talking about refinancing themselves. So then I had literally had two different people talk to me about refinancing today. And I'm already in this play, but that's what I love to hear. Because if I'm having people call me without them even knowing what stocks I'm in, and then they start saying the exact thing I expect to happen, and these are just people who know me, and they don't know that I like the refinance of Rocket Mortgage, who would make a ton of money on refinances, and there is tons and tons of money locked into these properties for years that people couldn't refinance. Oh. Rocket Mortgage should do well. And you can see that we bottomed out here. Let's pull up the weekly on this thing. I want to give everybody a look. All right, so for anybody that took my course, my live teaching session, you have what looks like a double bottom. A little bit tilted on the bottom here, but this is your neckline. And once you break this neckline right here, it's off and running. And this is on the weekly candles. It did break that neckline, and it is off and running. I absolutely expect to explode above this right here. So let me just pull this up right there. The highs we hit last time, absolutely expecting to get above there. So I like this, and I actually think we're going to break it and run for the reasons I talked about. And especially if we do get the 3 rate cuts, we could see the 10-year start to drop, and a good amount of dropping. And if we get into bad unemployment numbers, or unemployment numbers just being horrible, you're going to see more pressure to drop those rates. And if that is the case, you're going to see mortgage rates continue to move down to a point where I believe, personally, by the end of this year, we could be all the way down to high fives to maybe middle fives. Who knows? Worst case scenario for the economy, though, is what would need to happen for that to get down to the mid fives. I think it is doable by the end of this year to be in the fives without too much pressure. But in that case, that is by the end of December. Rocket should have a ton of people calling them up to go ahead and refinance and just making bank off of that. So I like what I'm seeing. I see the big money's already starting to get involved, because you can see it started getting involved right here. They knew about a month and a half ago they knew, and they're starting to buy. And so I follow this. We had a triple crust breaking, and yet we're even higher than that now. In other words, there's a lot of attention being put on this. A lot. And it is overbought. You can see that here on the RSI, breaking the Bollinger Band, but it's continuing to run for good reason, because of what I just told you. Now, the other stock that I have, and I have over $500,000 in, is TLT. It's just 20-year treasury. So this is one that it is 20 and 30-year treasuries, and basically that's what they have, 20 and 30-year treasuries. I get paid an interest payment on that, a dividend. And with that being said, it's roughly 4%. I don't know, plus or minus a little bit. And I bought it because I did the numbers on this, and you guys can double check. Based on 5 rate cuts from now, when I bought it a little bit ago, to the end of 2026, if we got 5 rate cuts, I expected to make 25% plus the interest payment on it. And so I was trying to make roughly $150,000 on this by the end of because 25% of what I had in there plus the interest payments, about $150K. So I have over 500 and something thousand in this. And that was my plan. And if they do 6 rate cuts, like they're now getting that involved, that means I make even more. And so I'm leaving that much money go until the end of next year to see if I can make more money on TLT. And this is a nice play for me. Obviously the government is going to pay their treasuries, and I'll just sit there and let that run. That's called the foundation to my portfolio. And on the higher risk play would be Rocket Mortgage. Obviously, it's a company. That's a lot of money into a single company. But I like what I see with them. And so I've dealt with them in the past. I mean, as a person getting mortgages and stuff, and it was very, very It is a really, really good experience. And no, I'm not sponsored by them. It was a good experience. I did a couple mortgages with them, and I did other companies too. There was one other company I really enjoyed as well, but man, it didn't get any easier than Rocket Mortgage. That was pretty straightforward. So with that being said, I am in there, and I want to see if my TLT, as a percentage gain, how about we do it that way, makes me more or less than I do at Rocket Mortgage as a percentage gain. I could lose too. I could end up, I don't think I can lose unless rates went through the roof on TLT. The rates went way, way higher, then I could lose money. But if we got Rocket Mortgage, now that's a company, we know things could get ugly, you never know. But I like what I'm seeing. Look what happened right here, TLT. TLT is finally gapping up, getting above the 50 EMA. And I think that 5's going to cross and the 13's going to cross, and we're finally going to get some running. And so that's what I've been waiting for. The rate next week, we have the Fed cutting rates, most likely. And that all will start to do wonders, hopefully, for my TLT. So I wanted to do an extra video tonight, just give you guys something to look at. If you want to follow along with everything I'm doing, hit that first link. Like I said, no cost, 72-hour pass to get into my Discord. I'll be live trading tomorrow. That's all you got to do, man. Take advantage of this. And I do have the free webinar right now. It's still available. And this is my 4-step framework for successful technical analysis. All you got to do is sign up. Enjoy that. It's about an hour long. Teaches you how to learn the technicals from a national champion coach. And of course, I do got, there we go. We got a little bit over here from Moo. This is expiring shortly, but you guys can take advantage of this. You can read that. You guys can see what they got there. You got to use the link, though, right here to take advantage of that. All right, family, that's it. That's all I got for you. I will see you in the Discord.